Good morning. It's June the 1st, 2024, and it's the Wall Street Weekly Wrap-Up with your host, John Newquist. And exciting month of May is over. Do you think we went up or down? We'll show you the heat map. You'll understand. Let's start out with the king, the one, the only, NVDA. Elon Musk AI got $6 billion of capital raised. Going to start up a chat GPT, years late, but he thinks he can make it be his equivalent that fast. Maybe it can, because I'm using Claude and Perplexity, and they're not bad. They're not as good as chat GPT. There's subtle differences. In some way, they're better. So I think this is going to be interesting. Who's going to pay $20 a month? That's they set the bar, and everybody liked that $20 a month. But you need a lot of $20 a month to pay for $6 billion. A lot. China's got a $6 billion AI project. Wow. That's $64 billion. $64 billion. A lot of money. So you can see the earnings were good. The video went up, and it's gone up, and it's gone up, and it's staying in this range. And, look at the 50-day moving average, 900. So, if you have a chance to get it in at 900, maybe not so bad. ConocoPhillips, one of our two energy companies with Exxon, they're going to buy Marathon, an all-stock transaction. Of course, people don't like buying this. It's they said it's going to be accretive to news, going to give you the dividend up, and it's going to be positive for it. I think it's good. Like I said, the consolidation in the energy sector is occurring slowly and gradually, and eventually we'll only have about 5 or 6 big companies, and that's it, But it's a good news, and I think it's good for them. And, generally it's been a slow trudge upward. Oil's been down, so Conoco's been down. Let's take a look at the heat map for the month of May. Look at the greens. NVIDIA, 30%. Microsoft, up. Google, up. Meta, up. Walmart, up. JP Morgan, up. I mean, generally a pretty good solid month, Amazon lost 1.4%. If you were Salesforce, there's the big red. We didn't have that. Another portfolio manager, he talks all the time about how good its company is and people overreacting. We'll talk about Salesforce. It's not a bad stock. I mean, I would not do it, but the man, I'll tell you, when they don't want it, they don't want it. So overall, a good month. Good. Most people did well. If you held on our portfolio, did really well, better than the average. We remember these numbers were 5%, and Nasdaq's up now 11.5%. Remember, we broke up the high this month. The month of May set the record for the Nasdaq. S&P. So it's been good. The indicators, interest rates been hanging around about 4.8 for a while. Everybody's watching it. Everybody wants to go in there and say, when's the rate cuts coming? I don't know. Maybe, next month? I don't know. December? I don't know. It's, they're watching the data. I don't see the July meeting having a cut, but we'll see. Crude oil under 80 again. Natural gas above $2 again. We'll eventually see these switch. But gas is cheaper, and that's, maybe the intent before election, have it cheaper gasoline. Gold still in the 2300s. That's good. We're bullish on that. Silver still hanging at 30. I showed PAAS mining. Pan American. We used to own it as a silver miner, but look at it. It's gone up. Well, because silver went up a lot. They sell and mine a lot of silver, so guess who's doing well? Copper still above 450, so that's good. I remember, it was under $3 a while ago before this year. And then one of our stocks, doing the Arrowhead Pharmaceutical on the, research of what we call lipoproteins. They do a lot of stuff to help prevent, cardiovascular disease. And it's been, positive for the phase 2. Stocks in biotech generally have peaked, starting a slow decline again. So this chart is a mess. I mean, and it's the point. We're watching the bottom, because if it breaks, we're probably going to get out of it. That's the way it is, the biotechs. Some are going to win, and the ones who don't hold, we got to get rid of, because, they can get worse, and a lot worse. One of our REITs, ARWR. A lot of data here, but they think the quarter's good. They guided for positive revenue, which is good. Occupancy is 96% for essentially properties, residential apartments and stuff. Renewals, if you ever had apartment complexes, you know that people always churning, so pays a good dividend. But this is the thing. This is what we want in a chart. Not like the arrowhead chart. We want it like this, going up and trending up. That's going to be good for everybody. The dividend's 4.3, so it's good for the REITs and good for us. McDonald's, it's getting near the October low, and we're watching it because the dividend's like 2.5. I'm telling you, they made these posts on social media about the $18 Big Mac meal, and I tell you what, it just set sales down. People are like, why are you buying it there? What I saw, the minute they started getting the big criticism, is the app. Alexa, stop. The app is pretty good. I hate to say I use it because when they tell you got a $2 Big Mac, that's not a bad deal. It's not $10 Big Mac like you saw where people said I got a Big Mac fry and a drink and it cost me $18. No, maybe one store, who knows where, could be Hawaii, which has high prices everywhere, but we don't know. But I mean, I'm just telling you, this is what I'm seeing. This is what I get. So you're talking about a $5 menu, for this kind of price, you can go get a liter of the discount soda at the supermarket for 2 liters, and maybe buy a small fry. If you can live without fries, you'd be okay, but that's a pretty good deal. And I think we're going to get to the point where it's busted below the trend. That's not good. It's out here. Will it bottom out? That's the real question. Now, it did a little bounce today because CEO got on there, talked about it only increased to so much, and maybe it was one store. I'll tell you who's having problems with coffee people. Starbucks, 30-minute line. Dunkin' Donuts. I paid $8.45 for a coffee. Now, I had 2 shots of espresso, but it's still $8.45 for a medium. Woo! Abercrombie & Fitch. I don't shop there. I don't like the store. I don't think the clothes are any good, but don't have to look at what I think. Look at the chart. It's been in a nice uptrend. Remember, there was a time where people were saying too expensive. Clap. Retail is tough. I can't tell you how tough retail is. But this is the number I look at. The revenues. They're doing better. When we get in the end slide, you'll see retail. They are doing one of the best in the retail sector. I don't see the commercials, so maybe I'm missing it. I went through all their catalogs this week. What they're doing is kind of what I call olive and light brown and beige shirts and stuff. It's kind of like I call it Gap 1990. That stuff, I mean, if it's coming back, they're selling it and people like it, and no more of the bright yellow or the bright white and the black. It's all about these muted colors and stuff. So secondary colors like green and stuff. So but that's good, and I put it on the radar because all the stocks have been pretty tough in retail, and this is a company that's been turning it around. CRM, Salesforce, is one of the big stocks, been in the club portfolio forever, because he bought it cheap, and he's not going to ever sell it. And he tells you, go in here. But this has been a slow down, and then it just dropped. Now, just look at these numbers. They beat by 7 cents. That's not so bad. Second quarter glided below cents. That is the death. When you sit there and say, well, second quarter going to be a little bit weak, they just dump it. They want high momentum. It is all about NVDA style mentality. So that's why you're going to get the dump. Earnings were good. Revenues rose 10% in tech. That's pretty good. It's just the wrong stock getting, it's not going to be strong. So people are just bailing. They say, I don't want to deal with this. I want a company that's going to increase earnings. I don't want to hear it's going to guide below consensus. I want to say it's going to guide above consensus. So this is what you're facing in the tech market. And we're trying to avoid those landmines. It's tough. Best Buy, everybody got excited. I mean, I'm missing it. You can buy everything at Best Buy, except they got exclusive. They have over 100 exclusives that are only at Best Buy. You only get it at Best Buy. But here it is, 6.5. This is going back 20 years ago when they were struggling. Everybody's waiting for the phone recycle, the Dell laptops. The AI laptop is not going to do anything that big. It will use the cloud to do most of the stuff you like to get on ChatGPT and other competitors, not on your phone. You don't have $1 million NVIDIA chip in your computer to do this instantaneously. You have to use the cloud. And what's the difference then? It really doesn't matter. What, a gigasecond of a speed difference? Nothing. It's just going to be bigger RAM, stronger RAM, multiple windows open like me at all times. So I think it's not bad, but it's not positive. I don't want to own retail that loses money. And let's take a look at the stock. I did a call in on it, John from Illinois, and you can go check it out on yesterday. You can see CNBC on YouTube, and you can go check it out. But I said, what about RIOT Platforms, BitMiners? This is actually pretty good because it's at $10. Was it 18? Bitcoin, $60-some thousand, and he says, go buy Bitcoin, go buy your Ethereum. So here's what we're going to do. We're going to watch, and we'll just track probably end of the month this time and just see what RIOT is at the end of the month, and then at the end of the quarter, and at the third quarter, and then the end of the year. Because I think the Bitcoiners are, I call them Bitcoin miners, Bitcoiners. I think they are underpriced. They have historically, they make $25,000 to make a Bitcoin. They're selling it for $68,000. That's huge. That's huge. I mean, I just don't see the difference. But, like I said, don't put a lot into these miners. As we say, diversify your portfolio. Try to, balance it out. If you get 20, try to keep them close to 5% if you can. Let's take a look at the XRT, a good Chicago radio station. Good look at this retail. This is the Abercrombie Fitch chart, right? I mean, this is it. Nice, steady, slower growth of a sector that generally is struggling. I always go through and I look at what is the revenue increase, shoe, which I don't really, I'm looking at, if I get out of one of retailer, listen, what do we got? We have Costco and we got Elf up 71%. Boom. The biggest increase in retail is Elf. It's killing them. I watch, the not the TikTok videos, but the Reels and the Instagram videos, and I'm telling you, these kids are just putting on Elf stuff. Why? It's good, it's cheap, they can buy a lot of it versus one, 3-to-1 on an Estee Lauder, or some of these other ones that are pretty expensive stuff. They're kids. They don't need the state of the art. They just want something that's good and works. And if you want to scrub your face, get something that's got sugar scrub in it or whatever they're using. Elf is it, and it's good. That's what's in there. Olaplex, which we used to have, I think it's good, but it's pricey, and people aren't buying pricey because they don't have that much money anymore. So we're looking at it. Under Armour, which I love, is struggling, along with other retailers. And I just put down some of the ones in there. But Abercrombie & Fitch, when you start looking at it, is out there. It's in there. Now our retailers are going to be Walmart and Elf. So Walmart 6%, good dividend. It's solid. It gives us stability. We don't have to have nightmares. They're doing great. They're right there with Amazon on sales, and online, same thing. They're trying to do the Prime version online. They got a few years to catch up to Amazon, but they're trying. And the big thing you can do to Walmart is you can order online, go pick it up at the store, and they'll take it right to your car. You just sit in the designated pickup zone, and the kids deliver the stuff right to your car. And you can't tip them. They don't want to be tipped, they told me, over and over. Except for a few. Then they take it. But Kohl's came out. Man, Kohl's, look at this, minus 10%. Why? Sephora, pricey. Elf, not so pricey. Sephora was hot last year. How the times change. So, it's been a good week. A good month of May. Don't let everybody talk to you. It was a good month. You own the stocks in our portfolio. You had a good month. And don't let the people sitting there scare you. It was good. We'll do good in June. I think techs will do a little bit better. NVIDIA can't keep on going up. Alexa, stop. And with that, we'll see you next week. Have a good week.